Thursday, August 1st, 2019, Maneco 64, home of alternative economics and contrarian views. So it's a long time till September 18th. It's about 50 days from now. So why September 18th? Well, that's the next FOMC meeting. I think the Federal Reserve, as I said yesterday, is between a rock and a hard place. Yes, they did cut interest rates yesterday, but Chairman Powell noted that this was a one-off kind of insurance cut. If you look back at the history of monetary policy, especially the Federal Reserve and other central banks, once they start on a path of cutting or tightening, they keep going. I think the markets didn't really particularly like the comments by the Federal Reserve Chairman. I watched the press conference a little bit, not the whole thing, and I have to say even the mainstream reporters from the mainstream media are starting to kind of get confused and ask questions. One of the questions was, I thought the Fed was data dependent, but now it seems that you're just looking at geopolitical or one-off events. Please explain. And Chairman Powell, I have to say, is no Alan Greenspan. He mumbled a lot. A lot of times he said, well, that's what we decided. That's what we think is best for now. Pretty much giving no reason. So yeah, I think they're between a rock and a hard place still. I think I even thought yesterday that the Fed might have to do an emergency rate cut. And why would they do that? Well, because I think the markets could could unravel before September 18th. They might have to do an emergency rate cut. They might have to wheel out all the Fed governors and other Fed members to talk the market up. They could do that. I think it's going to get very, very volatile and very interesting. Of course, the Federal Reserve note, aka the dollar, did rebound, has rebounded quite strongly against other fiat currencies, against gold and silver. Am I concerned for gold and silver? Of course not. They're the true dollar, as per the Constitution. Weight of gold and weight of silver. Federal Reserve note is just an imposter that's creating more and more Federal Reserve backed assets. They're lending more and more to the US government with no backing. And all that gold and silver do in times of no confidence, they rise against the Federal Reserve note. Yes, right now, gold and silver have dropped against the Federal Reserve note, but I think it's just temporary. Am I stopping accumulating precious metals if I can? No. Am I getting rid of my precious metals and putting it into Federal Reserve notes or Bank of England notes? No way. Am I advising people not to do it either? No. This is just my opinion here on this channel. It has served me well since 2002, trying to put some of my savings away in real money, that is gold and silver. The other thing I noticed before the Fed meeting, a couple of days before, was a story about Steve Leisman of CNBC. He's always been kind of, how can you say, a Fed cheerleader, I would say. Someone who never questioned the system, but he actually has questioned the system. And I think that's quite significant coming from Steve Leisman of CNBC. And he was talking to some people on CNBC, and he said, if the Fed gets this wrong, I think that they think if they make a mistake here, the Fed could be gone. And the guy that was sitting next to him asked him, what do you mean by that? He said, well, they could actually be gone as an institution. Because we could see people out in the street protesting against the Fed. And I think Steve Leisman is aware of, let's say, the antagonism there is for the Federal Reserve, for the central bank. Maybe he's watching my channel, maneco 64. I doubt it, but who knows? And yesterday as well, he asked tough questions of Jay Powell. So I think Jay Powell is nervous. I even noticed at one point he dropped some of the paper that he was reading from, and he had to pick them up, so he disappeared from the screen. So yeah, this is not great for the Federal Reserve note. It's great for the precious metals. Yeah, I know we have corrected down. It was very volatile. I did watch right at 2 p.m. Gold actually went up a little bit to like 1430, then dropped below 1420, and then actually went back up above 1430, so it was all over the place. Yeah, maybe not a emergency rate cut, but a lot of Fed talk, a lot of manipulation, a lot of wheeling out Fed governors to calm the markets down, in my opinion. And they're losing more and more confidence. I could feel that from the press conference. Usually a year or two ago, the questions were like softball questions. You know, they were not hard, you know, fastballs like they're starting to throw at Jay Powell. So what about the markets? Yeah, the stock market, of course, dropped yesterday. The Dow dropped 333 points, or 1.23%. S&P dropped 32 points, or 1.09%. The NASDAQ dropped 98, or 1.2%. So it wasn't a great reaction from the markets. I think the markets wanted a series of cuts, and that's not what Chairman Powell indicated. So where are we this morning? Well, spot gold is down again against the Federal Reserve note. We're at 1406.90. The low has been 1404. The high's been 1417. Silver right now is at 1605, down 20 cents. Range has been 1600 to 1630. The Dow was actually down last night after the close. The futures were down about 80 points. Right now we're up 32, 26,886. But I think we're going to see a lot of choppiness in the markets. Just before I started the video, we were actually down, so we're now up. The S&P 500 is up 2.5 points. NASDAQ 100 future is up 8 points. So it's 8:22 a.m. London time, by the way. I didn't specify the time. I'm a little later today, but it's actually a little busier after 8 o'clock anyway. Yes, the Federal Reserve note is continuing to strengthen against some other central bank notes here. And it's funny I'm talking like that because I was watching Bellin GP YouTube video about the Federal Reserve and gold, and he makes the correct point that the Federal Reserve note is not money. What's money is gold and silver, nor is the Bank of England note. They're just promissory notes. They're a liability. They're not real money. So we need to talk properly. Of course, I'll probably fall back into calling it what we see here, dollars and pounds and euros. But of course, they're just notes from these central banks. They're liabilities that people accept as money, even though they're not money. So right now, the pound is down another 1/3% at 121.16 against the Federal Reserve note, or the dollar. The euro, approaching 110 here. So it's down 1/4% at $110.46. Dollar has strengthened quite a bit against the yen at 109.15. It's up 1/3, and we're back up above 690 against the yuan. So yes, the dollar has strengthened, or the Federal Reserve note, but I think it's just temporary, as I said. And I think the lack of credibility that the Fed has is another important factor. The less confidence people have in the central bank, the less valuable its currency is going to become, in my opinion. Crude oil this morning, we're down about 1% in WTI, just below 58. Brent is down 0.8% at 64.44. What about the bond markets? Well, we've got the 10-year yield actually up this morning, about 3.5 basis points at 2.056. The 3-month is at 2.07. So the curve's still slightly inverted. Yesterday, yields dropped across the board after the FOMC decision. Before I finish, I like to show you a chart of the Dow gold ratio. So this is how many ounces of gold you need to purchase one Dow Industrial Average. And this chart goes back to beginning of 2015. And just wanted to show you that we're forming a massive head and shoulder formation here, which is negative, which means gold should continue to outperform the Dow in the long term. This is a weekly chart here. Of course, there is noise in the short term, but in my opinion, this chart looks very bearish, which means that gold should continue to outperform the Dow in relative terms. Does that mean that gold's going to go up? Not necessarily, but that is just that the Dow will do worse than gold. But I do think the seasonality, the season now is for higher gold prices anyway. As you can see here, we closed yesterday at below 19 in the Dow gold ratio. Recently, we've had actually a rally in that ratio, which means the stock market outperformed. But so what's the key level here? Well, I think it's going to be around 17, 17 and a half. To conclude, I think the Federal Reserve is in a tight spot. Chairman Powell doesn't know what he's doing. He's getting pressure also from the Trump administration. I saw that Trump tweeted yesterday already about the stock market. He wasn't happy with what Powell did. I noticed as well that two of the presidents on the FOMC board voted not to cut rates, the Kansas City Fed president and the Boston Fed president. So there is dissension as well amongst the board members and the people that vote in the FOMC. So as I said, it's going to be a very interesting next 49 to 50 days until September 18th. If you enjoyed this video, make sure you hit the like button, subscribe to the channel if you haven't yet. You can also follow me on Twitter, Steemit, and on DTube. I wish you all a great day. Take care. Bye.